Money Day, guys and girls, you're now locked in and learning with Vel. So to break down my strategy for you guys, I just want to show you exactly how simple and effective this actually is. So I'm going to just highlight a candle as if I was going to take a trade. And what you would see is this candle here would be my session candle. If I can find the word session, here we are. And actually I'm going to change the outline. Oh, wrong one. I'm going to change the outline to black. This has changed to purple somehow. How's that happened? Okay, cool. Okay, yeah, cool. Alright. Now, thankfully, with the new update, we can highlight the middle. The middle is going to be 50% of the candle, which is perfect. And we're going to wait for price to move up 40 pips or more. We can see here moves up 37, so that means we wouldn't have taken this trade. And that's a good thing, because sometimes that saves you from getting into a trade too early when you shouldn't have. What we're looking for here is we're looking to see price move more than the average amount that it usually does. Now this is GBP USD, guys, okay? So ultimately with GBP USD, it tends to move around 30 pips on average. So we're actually looking for price to move more than the average, so that once it actually moves past 40 pips, which is just a number that I've created, okay? If you developed a strategy for yourself, you'd have numbers that, they're not given to you. These are numbers that at the end of the day, you have to make a decision on deciding if this is a good idea or if it's a bad idea. So for me, 40 pips was the number where I said, okay, I want it to move 10 more pips than the average. Once it does that, I can feel confident to say, okay, cool. Now that price has moved 10 more pips past the average, it's not an accident. So in actual fact, when we see over here, price moves up 70 pips, all that says to us is cool. Now that we know price has moved up more than the average, this is most likely the direction market wants to go in. So when it pulls back, we're going to be interested in seeing if price can go long. So in this case, when price comes down, we can see here that we get a reaction. And of course, one of the things that is important to understand here is we may get a reaction, but the reaction may be not what we're looking for. Meaning, price may only move up 5 pips from a session candle. It may only move up 20 pips, 30 pips. It may move up 1,000, but it's not going to be the same outcome every single time. So in this case, price comes down. It comes up slightly, but it really taps us out of the trade. It comes down past 35 pips, which is fine. Now we have, 2 ways at looking at this. Okay. The second way to look at this is by looking at it saying, okay, cool. Now, because this trade lost, if we look at what price has done since the close of the candle, price has come down here 93 pips. So when price pushes back up, what do we look for? We look for a sell, okay? Because it's the same criteria. We don't care if price is going up or if price is going down. Price just needs to move more than 40 pips. As long as price moves more than 40 pips away from our session candle, then that's the criteria for us to wait for a pullback to get into a trade. And the reason why we highlighted 50% of the candle is because we want to maximize our profit. So when I say we want to maximize our profit, this basically, of course, in some cases can save us. And I say it can save us because in some cases, maybe the candle that we're playing out of might be larger than 35 pips, which means having another entry at 50% of the candle can allow us to potentially stay in the trade if price is going heavily against us. But if price does just, tap the 50% and move away with no questions asked, then it just means we've got more profit on the table to collect. So what we can see here is, we tried to get a buy. The buy didn't work out, okay? But then price moved down more than 40 pips. Now, maybe we see it happen over here. Okay, over here, price has moved down 55 pips, right here. So by the time we've seen this take place, this move here, when price is pushing back up, we can take another trade. We can take one from here, the foot of the candle. And then we can take another one from 50% of the candle. I'm just going to clone this. So we take another one from here from 50%. Right? Now by doing that, we can see that price comes down. And this is a 3-to-1 R&R. Price gives us 2.47 to 1. So that means we definitely bank 2 TPs. TP1, TP2 is banked. Okay, on this trade up here, it's the same. TP1, TP2 is banked. So we had one losing trade here. So you could say we're down 1. If we do 1 here, it's 1 losing trade. And then we had 2 winning trades so far. We had 1, 2. Okay, 2 against 1 so far. Price pushes up, comes back to our entry, and guess what? We take the trade again from here. That's this position here. Price comes down, and with price coming down, we can see that we've most likely hit TP1 for sure on both trades. So we can go 4 trades here because the market's now closed. If we go up, we can see here. Here we are here. Here we get 85. Just okay. So we're not actually at TP1 yet. 35 pips would be TP1. So we're at 30. But this position is giving us 44, let's call it. So we're definitely at TP1 with that position. So the 2 things that happens here is this. Prices come back to the same entry that we previously took, where we grabbed 2% off the table, right? Prices come back up, now it's come back down, and now we've grabbed another 1%. So if we do the maths here, we've got 2 plus 2 is 4%. 1 plus 1, let's not call this 1, it's 5 pips short of 1%. So let's eradicate this. 2 plus 2 is 4, plus this 1%, that's 5. That's 5% across 4 trades. 4 trades, 5%. If we look at this trade here that lost, okay, that's minus 1%, but we can also say that this trade really is equal to this one. This one's 5 pips away from TP1, which would just mean that this trade would cancel out this one. So that's 6 trades, 6 winning trades that we would have here against 1 losing trade. Okay, and even if we lost, and if we do the maths on this, okay, so 70 times 4, 70, is it 70 times 4? Let me make sure the maths is correct. We had TP2 reach here, TP2 reach here, and then we had TP1 here. Okay, cool. So this one's come down, TP2, 70 times 2. Okay, well, it says 75, so let's do it correct. 75 times 2 is what, 150. And then price comes up again, comes down here. What's this one? 44, 40, 43. 43 plus 30 plus 43 plus 30. Okay, that gives us 223 pips in total from just these 4 trades here, guys. Okay, 4 trades, 1 entry, 2nd entry. But then prices come back over here. So we had the 3rd entry, which is this position, the 4th entry, which is this position. Okay, 4 entries minus 35 pips. That still leaves us with 188 pips on the table. Okay, 188 pips gives us a nice, clean, and precise strategy. You guys are probably expecting me to say something else there, but it just gives us a nice, clean, clear strategy. Okay, we understand that we're looking for buyers. We're also looking for sells because we're not discriminating what this candle's doing, whether price pushes up or whether price pushes down. We don't care. As long as price moves more than the average, which is 40 pips, and it pulls back into our area, hey, we take the trades, I call them out, you guys take them, we're all screaming money there. Bada bing, bada boom. If we can scroll back, we can see other trades we've caught, trades that we yet to catch, trades that we have caught. The results on this strategy here is endless. But this is how ultimately I was able to grow my account 80%. 80%, guys. Grow my account 80%. Remember, all you need to do is catch a move that really does go in your favor. These are just small moves, 90 pips, 100 pips, 105. But sometimes you'll catch a buy, like for example, maybe let's say here or inside of here, for example. Yeah. Now, if we see where's the 1 p.m. candle, 1 p.m. candle's here, so nothing's come back down. But let's just say something did come back down right here. Yeah. And let's say you catch the move right here. Well, catching a move right there, what does that do? That gives you an awesome position to hold, and the profit is endless on that one. The profit is really endless. I think we even catch a move. I think if we look into the charts and we scrutinize it properly, we find ourselves an entry. Okay, right here. Right, Price pushes up, comes down, and what happens when it comes down? Just to make sure, it's moved up 40 pips or more, comes up 64 pips, comes back down, and hey, bada bing, bada boom. We take one entry here. We take another one from 50%, but price doesn't reach 50%. And what happens? Price gives you over 450 pips and still going. Okay? 621 pips now. For a lot of you who are new to my channel, you'll notice that inside my community, I do take a lot of intraday trades, sometimes swing trades for this exact reason. Sometimes we get into such a nice buy or such a nice trade that we don't need to close it. Why do we need to close a trade when it's still going in the direction that we want it to go and we have reason for it to go higher? We simply sit in the trade, relax, and get paid.